the main parts anyway. So, all right, cool. All right, let me share my screen and let's do a indicator breakdown. Well, first let's check news. 1 second here. Boom. All right. I know this is a little, let me reset this chart to clean it up a little bit. All right. Indicator breakdown after we check news. So actually, go home. Yep. Leave here. All right, let's check the calendar to see if we have anything that's going to mess us up this week. Scroll up. All right, so Monday, we don't have any major reports. Let me turn that off. So we have some reports. We got retail sales, nothing too major. Turn back on this only high importance toggle. Cool. Nothing major Monday. Tuesday, we do have retail sales month over month. It looks like the forecast is a little bit higher than the prior. So it's going to be interesting to see what happens. Last week, the market was moving based on the reports. So if you traded last week, you know that the market was extremely choppy. Like you had days where it's sky high, you'll jump in the trade thinking that it's going to continue. The next day is down, and then you'll get out the trade, and the next day it'll go right back up. So watch these reports. Tuesday, again, we have retail sales. This is at 8:30 a.m. Eastern Standard. So before the market opens, we should get the print, and then we'll see how it's driving the market. Wednesday, we have a lot going on. So we have, I mean, the building permits preliminary is not really that important. This is what you want to watch out for. Anytime you see Feds, Jerome Powell, those are the two things to watch out for. If you're ever looking at the economic calendar and you're wondering like, okay, I'm looking at it, but I don't really know what to watch out for, circle this in red. Feds, FOMC, and Jerome Powell. He's the Fed chairman. The reason why is because this is a major market driver. So whatever happens during this interest rate decision is going to drive the market. So a lot of people lately have been saying that we could potentially get another rate cut, but it's kind of like a 50-50 right now. So if we do get a rate cut, you can see the forecast is that we're going to get a rate cut. The prior was 4.75. The forecast is 4.5. So that means that we will get a 0.25 rate cut. That's what is being forecasted. Does that mean that it's going to happen? No, but this is what people are banking on. So if they keep rates the same, or they could cut the rates and then say, hey, well, we're not going to have any more rate cuts for the foreseeable future. That could be bad for the market. So, excuse me. So 2 o'clock, 2:30 Eastern Standard. Pay attention, especially for my people that are trading options. If you're looking for some volatility, you want to play puts, calls, whatever around this time. I would say honestly 1 o'clock to the market close, between 1 and what 4, I would be watching for some volatility. So you got these this interest rate decisions, you got the economic projection. So I'm thinking, let me see. This is going to be the economic. Yeah, they're going for, I want to say this is going to be for the next quarter, or it's going to be for the next year. I'm not sure. It's not telling me here, but and then you have the Fed press conference. So this is where you could actually watch them talk about. This is going to be presented by Jerome Powell. He's going to talk about what he thinks is moving forward. So if he's depending on, and it's very interesting to see it happen when you're trading, depending on, like, they hang on every single word that he utters. So if he says something good, the market goes up. He says something bad, the market will drop in real time, like while you're watching it. So again, this is Wednesday. Be careful. Thursday, we have GDP growth rate quarter over quarter, which I think that's not going to be as big. This is the point of the week right here. You circle this one. GDP growth rate. I think that should be normalized. And then we got Friday. We have the core PCE, which is about inflation. And this is really going to drive the Fed's decision the next time. So this is after they tell us about the rate cut or potential rate cut. And then this is going to, they'll factor this in when they, make future decisions. Any questions? Let me check the chat. All right. Fed moves may be priced in already. Bond yields are moving up oddly. Yep. Yeah, that's a good point, Ross. The Fed move may already be priced in because the market is up so high. Honestly, I think we need a pullback. I was just saying that in the Discord that we're either within the next 30 days, we're going to get a pullback. How sharp of a pullback, it depends, but we should be pulling back soon. Now, if it pops up off of Jerome Powell's words during the conference on Wednesday, be very careful because at some point the market has been extremely bullish this year. At some point, people have to take profit, and you don't want to think that okay, it's at all-time highs. I'm gonna buy in right now, and then it pull back. So I've been telling people that have been looking to hop into the SPY that you can if you want to, because I think that eventually the SPY is going to be at like $1,000. It's at 600 right now, but if you want to get in at a better price, you may want to wait for it to pull back because all of the indicators are screaming. So good point, Ross. All right, indicator breakdown. So let's look at the SPY. I just talked about it. Let me clean some of these lines up. So we're going to do an indicator breakdown. We're going to break down everything on the screen, but this is the SPY. It looks like this because we're looking at it on the weekly. Normally we would check it on the daily, but again, I want long-term projections. I want weekly, 2-week, out to a month per candle. So that's what we're looking at. All right. First thing we're looking at is the RSI. RSI is pretty much telling us the if the stock is overbought or underbought. If the stock is towards 70, I would say between 60 and 70, it is getting overbought. And if the stock is down between 30, I would say 30 and 35, the stock is underbought. So when we look at the SPY right now, again, the SPY is around all-time highs. It is at 60. We can round that up to 67. So right now the SPY is overbought, or it's a few points away from being overbought. And I never buy high RSI stocks. I don't care what stock it is. I don't care what they're saying that they're going to make. If the RSI is too high, eventually it's going to come down. You can look here. RSI spiked on the weekly and had a sharp drop off. Same thing here. It spiked all the way up to 80 and sharp drop off, right? So you want the RSI low so you can take it up to those higher levels and take profit, especially on the weekly, because this chart is going to move a little bit slower. But ideally, I like 45 to 55 pointing up. This you could have got in right here. It touched 55 and then went back up to 70. And then right here, I think it touched high 55s going into 56, and then it went back up as well. So 45 to 55 pointing up is ideal for me. But again, the SPY right now is hot, 67. People are asking, should I buy the SPY right now? It did good on the year. And I'm just like, I can't trade a high RSI, right? So again, it is overbought in my opinion. And I'm just waiting for a nice pullback so I can plant my seeds and then pick my fruits later on. Any questions about the RSI? Cool. All right. Let's break down the moving average ribbon. So looking at the moving average ribbon, let me hide the VRVP because sometimes it can be distracting. The moving average ribbon is just my ribbon of moving averages. So we look at the SPY on the weekly and we're looking at its moving averages. We can see that all of the moving averages are kind of going at a diagonal, but they're still parallel, right? Some space in between, but you'll notice that the candles are only interacting pretty much with this top line, right? So that top line on my MA ribbon is my 20 MA, right? So since we're on the weekly, this is my 20-week moving average. So this is the average stock price over the last 20 weeks, and it's just in the form of a line. And then you got my 50-week, 100-week, 200-week. And you can see that the special thing about this setup that I like to use is that when you're using the 20 MA, it is very easy to find spots to pick to where you can buy the dip and sell at a high only if they are stacked in chronological order. What I mean by that is that you need them to be 20, 50, 100, and 200, literally in this order from least to greatest. So when we look at it, we got yellow, orange, burnt orange, red. They're stacked in that way. And you can see how the price is behaving, right? It's going up, came down, nice entry right here, take it up. This actually hit a level of resistance. It hit a ceiling, took a little dip, went up, came down to that 20, it actually broke for a second and then skyrocketed right back up. It hit another level of resistance, went down to the 20 again. So there's multiple points along that 20 that you could have taken advantage of, right? And you can see now we're right here. We're really high up off that 20, right? So since we're high up off that 20, that means that eventually we're going to come down and test that 20 at some point. We can't just go off of the 20. We bounce off the 20 and never come back to the 20. I don't know of any chart that you can look at on the weekly. Now you could look at a month or 6-month chart and find that, but on the weekly, on the lower time frames, you're always going to get a retest back to key levels, and I think that's where you go back in. So looking at the SPY is at 604 right now. This moving average is at 572. So currently, we don't know what the market is going to look like tomorrow, but currently this could be a potential bounce point. And I'm saying potential because there could be a few. You could have one here at 586, or you could have one at 600. Currently, I'm looking at 600 for a pullback. After we pull back to 600, I want to see how the stock acts at that level, and then we'll be able to make our decision from that standpoint. Do I have any questions about the moving averages? Pretty simple concept. Let me check the chat. Folks typically sell for a watch sale. Yep, I agree with you, Ross. All right, no questions. Cool. All right, VRVP. This is pretty much telling you the levels of buys and sells, pretty much. And it adjusts depending on your time frame. Now, in my opinion, this works better on lower time frames because it can pretty much get into the cracks and crevices and give you that information. But since we are on the weekly, and again, being on the weekly means that every single candle, regardless of how large or small, or if it's green or red, represents the price for 1 week. So if it's red, that means that it started at 558 and it went down to 538 that week. If it's green, that means it started at the bottom at 542 and it went up to 559 that week. So each candle represents a week. When you're looking at the VRVP, these nodes are telling you the buys and sells per the price, right? If we go to the data window, this is the VRVP right here. It stands for visible range volume profile. If you hover over these nodes, it will tell you how much up and down volume you're looking at. So up and down volume is just buys and sales. If we hover over this node right here, this main one at the top, you can see that the up is at 89, down is at 111, or you can call that 112. If you go down to this level, you can see that there's more up now. There's 145 up versus 109 down, right? So that means that more people are selling at this level and here, but then down here around what 585, between 585 and 600, people are willing to buy there because there's more buys sitting there. That's the easiest way to use the VRVP on the weekly. There's other ways to use it as you go down in the time frames, but due to the sake of time, we're going to be looking at it on the weekly for this example. So again, VRVP, and it also adjusts depending on how many candles you bring in. So you scrunch it up, wait, it's going to do its thing, boom, it'll adjust. And then if you need to really zoom in and see, okay, I only really want these candles, give it some time, boom, it's going to tell you. So you can see, you can even see on the VRVP right here, when you lock in some, you can see around 600 we could be getting a bounce, right? Because there's a lot of volume just in general sitting right here. There's more volume than these price points above and these price points below. So this is kind of where we could stagnate on the pullback. And this is why I said at 600, I'll be looking at the spot for a move, a potential move up or down. I just need to check my other indicators. All right. 1 second. Reset it. Let it do its thing. Boom. All right, let's keep it moving. So we talked about the VRVP, talked about the MA ribbon, and let's talk about the MACD. So the MACD on the weekly still functions the same way. Again, it's the weekly, it moves slower. The only thing you really need to know about the MACD is that if the buying pressure, well, let me back up. If the blue line is on top of the red line, the buying pressure is dominant and is going to be applied to the stock. So you can see that for this swing of their interaction. We got the blue line on top. The blue line is just saying that there's going to be more buys happening. There's going to be more upwards action versus downward action, right? So when you have the selling pressure being applied, the red line is going to be on top. So you can see right here, red line is on top. Now we're selling off more than we're buying. Not saying that it's not going up. You'll have some days, or since we're on the week, you'll have some weeks where it went up. But overall, the trend is still down. So if you want to know, okay, is this trending up or down? You come to the MACD, you look at, okay, which line is on top? Blue is on top. So that means that buying pressure is being applied. It wants to go up. If the red is on top, that means that selling pressure is being applied and it wants to go down, right? If it gets too convoluted, you can't really tell, check the histogram. The histogram is going to tell you which way it's going. If it's green, buying pressure. If it's red, selling pressure. And also as it fades, if it's fading is like this faded green, that means it's about to drop over to selling pressure. If it's this faded red, that means it's about to go up into buying pressure. So you can see here, we got a lot of dark green. We got one faded bar that's saying that, hey, we could be losing some buying pressure and we could be dropping to selling pressure. But again, this is on a weekly, it moves slow, and these are only printed once a week. So this week coming up, we'll be able to see, okay, is it another faint green? And use that information to make our pick moving forward. Any questions on the MACD? Cool. All right. Let me check the chat. Can you talk about how we should be looking at bond markets as it pertains to stock moving? Yeah, so the bonds, to keep it simple and short, I guess I can go into more detail later on, but to keep it short, if the bond yields are moving up, that's a point to be cautious when it comes to the stock market. And they've been slowly moving up. The market has been moving up. And that's where it's like, okay, this is getting weird, because that means that the market could be pulling back when people are still thinking that the market is going to be bullish for all of 2025, right? Because it's been bullish for the last, year and a half, almost 2 years. So that's kind of the gist of it. I can go in more detail later on, but it's kind of what people use it as. All right, cool. Last indicator is the stochastics RSI, top left-hand corner, telling us what we look at, where we're looking at. And this is your momentum indicator. So you want to know if the momentum is to the upside or downside. And the stochastics is really good for doing that. And it works kind of similar to the normal RSI. We do have our colored range, right? So we got a range that starts at 20, it ends at 80. The normal RSI is going to be 70 to 30. And the way that this one works is that if it's going up, that's going to be upwards momentum. That's more momentum to the upside. And the lower, the better. So if you're getting into a trade, let's say if we wanted to trade the SPY and the SPY went back to, let me revert this. Let's say the SPY went back to, I don't know, 600, or we can go even lower. Let's say the SPY went to 585, right? And the stochastics came all the way down here to zero. Zero's down here. It came all the way back down to zero. That is actually good, because if it comes down to zero, that means the downward momentum is kind of stagnating, right? That means the pressure and pushing it down, the momentum to push it down is pretty much done. It's going to be slowing up, right? And then that also means that we have a lot of potential to take our momentum to the upside. So when you're looking at a stock to get in, you want a low stochastic, right? And again, the lower, the better, in my opinion. Be careful if it's too low, right? If it's down here at zero, you may have to wait longer. That's the only thing. So for my option people, you're trading a low stochastic, add more time to that contract. Because again, just because it's low doesn't mean that it's going to do a one tap and then shoot back up. Like right here, came down, hit around zero, went up, came down one more time. So this would have been chewing up time on your contract, right? And then it shot up. So just be careful with low stochastics, and just make sure, again, if you're buying shares, it doesn't matter. If you're buying shares of the SPY, and let's say you're buying this and you plan on selling it in, I don't know, 4 years, 5 years, then a low stochastics really, that's good for you. It doesn't matter if it stays down there for a month, which that wouldn't happen. But if it did, it doesn't matter. You plan on selling this years later. So yeah, that's just for my option people. But when it goes to the upside, what I start to watch is once it breaks this 80 line, it has room to go up to 100. You can see if I scrunch this up, it likes to frequent 0 and 100. We got a lot of touches top side at 100. We have a lot of touches bottom side at 0. So once it breaks 80, I start to get cautious, especially if I got in at a good stochastics level. Let's say I got in at 20, 25, and I took it all the way up to 80. That means I've made some money for sure. And now it's starting to top out between 80 and 100. You can see here, if you were to wait it until it went to 100, it only went to 91 and then shot all the way back down to 0. So I like to tell people that if you get in with a favorable stochastics, check that 80 to 100 range, right? If you want to be conservative, it can get to 75. You can, that would be a good place to go ahead and hop out and take profit. Or if you're a little bit more risky from an option people, if you got way more time than needed on the contract, if you want to, it's not financial advice. If you want to, you can take it up to 100. I'll leave that. It depends on the risk of the trader. But for me, if I got in, let's say I got in at 20 and I took it up to 80, I'm taking profit. I can't say what anyone else would do, but that's kind of the rule that I stick with because it bounces. Even though it frequents 0 to 100, it likes to scramble in between 20 and 80 as well. Like you can see how many lines are in this blue area alone, right? Like forget the white area for right now. It's just most of the action is in this blue area. So that's opportunities to make and take profit. Any questions? And let me take a sip of this water. Let me check the chat. Ooh, yes, chlorophyll water is pretty bad. All right, cool. No questions. Perfect. All right. That is the indicator breakdown. That's a SPY on the weekly. I will be charting the SPY out again to see the key levels on weekly, 2 week, and 1 month, because that's going to help us figure out what we could see going into the next 2 weeks, and then what we could see first quarter, second quarter of next year. So I appreciate y'all, and I'm going to go ahead and send it over to Mark so he can cover y'all picks.
Appreciate that, Darius. Give me 1 second to share my screen. Do entire screen. Share. For that. Okay, let's check. I saw a few already in there. Okay. So the first one we're going to start with is Microsoft. Okay. Oops. All right, so looking at Microsoft on the weekly, and I'll clear out some of these trend lines. We keep the support and resistance. So we're going to leave them. So, all right. So this is Microsoft on the weekly. We can see from a weekly standpoint, it's looking like it still has room to continue to go up outside of the stochastic. The stochastic RSI is a little bit high, but with that crossover to the upside on the MACD, where my blue line buying pressure just crossed over my red line selling pressure, that's normally a bullish indicator. So we could potentially see Microsoft try to make it back to this 464 range, this resistance we have drawn up here. We may be able to draw it a little bit lower if you wanted to and say that this is the support where it can reach about 460 would be the next place that it can get to from where it's currently at 446. So we could be seeing Microsoft in the next few weeks hit 460. Just looking at the weekly. And then again, with this RSI level, it's just a little bit outside of that sweet spot. The one thing that I will be watching is the stochastic, but we know it can't, it's trending towards getting to 100, and we know it can stay at 100 for a little while. We can see back here, if we go back, we can see once it hit 100, it stood there for quite about a month. before it or yeah, about a month before it started to turn around. Actually, like 2 months or 3 months, excuse me, before it started to pull back. So we could see it trend up and stay at that 100 range. That could be what's about to happen. But it's looking like we should at least see it get to about 460 in the next few weeks. And let's look at the daily to see what's happening. Okay, so daily, everything is high. RSI level is high. Stochastic is high. So for this week, we may be seeing Microsoft pulling back and trying to come back and test this support we have at 440. This is going to be a strong level of support. So this, if it does cool down, this is the level that I'm looking to see. Hey, what's about to happen? Are we about to see? If we hit this level, can we reject this 440 range and start to trend back upwards? If we can, then more than likely we're going to start to see. We should see Microsoft trend up back up to this 450 range or 460 range that we have here. And I say this is a strong level of support because if we go back previously and when the stock price was playing beneath this line, we can see that this stock treated this level as a resistance, and it was a strong resistance. So we have back here, it broke above this resistance, but before it broke above it, we can see it tested resistance and pulled back before breaking above it. And then back here, we can see the price was going up, got close to this level, rejected it, pulled back. Even back here, price was going up, tested this level, pulled back. And back here, when it was above it, we can see it was coming down, broke beneath it, but then rejected it and played on this level for a few days before finally breaking beneath it. So that's going to be a strong level of support. So what I'll be looking for, if you're looking to get into a trade, looking to get into a quick swing trade or option play, I'm waiting to see, okay, because my stochastic is high and my RSI level is high, I'm waiting for this to pull back. And when it pulls back, I'm waiting to see what happens once it tests this 440. So when it tests 440, can we see a rejection? If we can see a rejection in the price at 440, then I would feel more comfortable getting into that call play or that swing play and playing it back up to 460. Of course, you'll have to reanalyze the other indicators just to make sure that it is testing that bottom and it's about to turn around. But a rejection at this price is going to more than likely show us that this price, that it's about to reject this price and continue to trend upwards. Pair that with what we see on the weekly, that'll be a good place to go ahead and get in to a play. Any questions on Microsoft so far?
No, thanks, Mark.
You're welcome. So I know we have a new system inside of the Discord that's going to allow us to create alerts. So I'm going to off camera, I'm going to create alerts because I'm still getting used to it. I'm going to create an alert for this, and then the alert would basically be once this if Microsoft hits 440, it will send an alert into the Discord letting everybody know that it tested 440 to reevaluate the play and see if it's rejecting this line, and it'll say it on there. All right, so let's see what the next one was. Yeah, that's going to be a game changer for sure. AMD. Weekly. Okay. AMD. So, and I can clear out these trend lines, but we see we're on a double bottom there. Okay. So AMD currently testing support. A support line we have drawn here at about 130 is going to be support. We see it rejected anytime it tested support, it rejects that level and trends upwards. Is right here, rejected the area, went up, came down, tested it, rejected it, started to go up. So this is going to be a nice little level of support to have. Looking at the indicators, stochastic is really low, which is what I like. What I'll be looking for on this one is, can we reject this level? Will we reject this level? And if we do reject this level, where can it go? The first place is going to go and test is going to be at about 144, 145. It's going to be the first level, which is our support resistance we have drawn here. So if it rejects 130, the first place it's going to go is going to be about 145. And then after that, if it breaks above 145, we can then see it try to get back to 156. That's going to be the next level of resistance. Looking at this weekly chart, I'm liking the way it's setting up. Again, stochastic is low. RSI level is pointing downwards, but once that starts to point up, we're going to be really close to that sweet spot of 45, 55 that we like to trade. We do have the MACD where the buying pressure blue line is beneath the selling pressure, the red line, which is bearish. But once we start to get that blue line to point upwards, point it being a positive slope, we're going to then start to see this stock price also increase. So all I'm waiting for is a rejection on the support. And once I have a rejection and is evident that it's a rejection, and I'm looking at all of my indicators and they're pointing upwards for me, which they should be, I will feel comfortable getting into that trade. And again, the first place you can go and trade this up to is going to be about 145. And then after that, it'll be about 155. That'll be the next place that you can go ahead and trade it to. And let's check the daily to see if we can have that rejection this week. Yeah, so looking at the daily, again, we can even pull this down a little bit so that it can be on that. But support, if it can reject this support level, again, the place is going to be coming to is going to be 145. It may come and try to test this 135 range first, but ultimately it's going to be coming back to 145. And looking at these indicators, stochastic is really low. We have that RSI level really low. If we can get that rejection, I will feel really confident in getting into that trade and at least playing it up to 145. So what I'm looking for is rejection on this. If we can get a rejection, maybe a day or two where it rejects this price and it's a green can, it's two green candlesticks, then you can go ahead and play this up to 145 for sure. Yeah. Any questions on AMD? All right, perfect. Let's see here. What else we have? So, let's see. AVG. Okay. So earnings caused this stock to spike up. And you see it spiked all the way up to about 228, pulled back down to about 200. So we can say the level of resistance we can draw, we can say it's going to be at about 200. If it was to break above this level again, it's going to start to move into those all-time highs for this stock. And then with that, where's my? And then with that, all we're going to be seeing with that is that we just treat it in $5 or $10 increments from that point. So if it breaks above 200, the next place we can see this get to is 205 and 210 and so on. Just keep treating it in $5 increments from that point. Now, if it was to reject this level, we're probably going to be seeing this come back and try to test around 180, 179, 180 will be the range that it's going to come and test. So currently, this would be the trading range that I would be looking for. If it was to reject, I'm waiting for it to get back to about 180 and see what happens there. If it can reject the 180 support level, then I will feel comfortable getting into a trade and you can trade it back up to about 200. Now, just looking at it off a standpoint on. Thank you, Jessica. That's hilarious. I'm happy she likes the sound of my voice. If it threw me off. If the stock price goes up to the RS, if you're looking to get into this stock, the place that I wouldn't necessarily say for a long-term position to get in right now, just because of where that RSI level is at, is pretty close to being in that overbought region. So I would be just waiting a little bit for this stock price to pull back maybe to this 50 line. But just looking for a trade, this could be a nice little spot to go ahead and find a trade. We do see the stochastic has some room to go up, and then we were really close to a MACD crossover to the upside. So if we was to get that again, I would be looking to trade this to about 205, 210. That would be the target price that I would have for this for a quick little swing trade. And that's on the weekly, so that may take a few weeks to happen. If we look at the daily and see what we can establish here. Yeah, so you see, looking at the daily, RSI level is really high. Stochastic is really high. We do have separation on that MACD, but ultimately for me, I'm thinking this has to come to pull back. It's not gonna, I'm not saying it's gonna pull all the way back down here, right? But we should see this pull probably back down to about this 200 range. So that's what I'm thinking is going to happen. And then from there, that's when I will start to look for trades. Once it gets to 200, I would then start to look for, okay, can this price reject this 200 support line we have? And if it can reject this $200 support line, then I know it'll probably be going back to about 210, 205, 210 would be the places that it'll probably try to get to. Yep. Any questions on AVGO? Let me check the chat. So hilarious. All right. All right. Next stop. Yeah. Marvel Technology. Start off on the weekly. Okay. So weekly RSI level is pretty high. Stochastic is ramped all the way up at 100. We do have separation on the MACD. So I would say looking for a long-term position, again, this probably wouldn't be the best place to go ahead and get in. But you can, but if we was to pull back, we'll probably pull back to about 106. Now, if you're already in this trade and you bought down here, I would say you don't got to get out your entire position, but I would definitely shave profits at this point. You made a nice little investment right here. So you go ahead and shave profits, wait for a pullback so that you can reinvest. Again, if we pull back, the first place it's going to come is at about 106, 105. After that, if it continues to pull back, we could be seeing it try to test the top of these candlesticks or candle wicks at about 95. We'll call it just an even 95 for our next support level. Now, if it continues to trend upwards, first place is going to come and test. It's going to be here at the top of these wicks, which is at about 120. And then after that, $5 increments, 125, 130, and so on. Again, looking at the RSI level, I wouldn't necessarily say, okay, this is a good time to get into this play. It looks like this play is already you missed the boat on it if you haven't gotten in yet. So I would just be a little bit careful with that, especially trying to hold it for the long term, because you could probably find this for a better price. And then if we look at the daily chart, RSI level is pretty high, sitting at about 74. We do have a little bit of room on that, on the stochastic to continue to go up. It's testing that 50 range or the neutral zone. So if it can break, if the RSI can get above the neutral zone, we should at least see this try to get back to about 70 or 80, excuse me, on the RSI level. This is going to be 80 on the RSI level before trying to get back to the over BART region. So you do have a little bit of room on the daily, so we could see this continue to go up. I would just be a little bit careful because this right here could be a bullish flag that could be forming, or it can also be a head and shoulders, which we know head and shoulders are bearish, but this could be a bullish flag to where stock price creates the flagpole, creates the flag, pulls down, ultimately breaks up to create some new highs. Now, this can also be a head and shoulders where it creates the first shoulder. It's going to create the head. So it may test right here, pull back. You can see it pull back to maybe about 105. Create the second shoulder. Should be somewhere right here. Until it ultimately pulls back down to around $95. So just be a little bit careful here. Again, with this, the RSI level is high. If that stochastic does reject that 50, we're going to be seeing that coming down as well. And with that, we'll have a MACD crossover to the downside that can start to happen. So I would just be a little bit careful trading it. Now, if it breaks above this support or resistance we have at 120 and it looks like it can hold there, then you can try to get into a quick little day trade or swing trade to the upside. Now, if it was to pull back and it's not going to complete that head and shoulders that we just created, which I'm thinking that's probably what happened, because when it starts to pull back, I'm thinking that this 20-day moving average, this yellow line, is going to get closer to this support support we have at 106. So I'm thinking the stock price is going to come and test this 20-day moving average, which will ultimately be at about 105, 106 when it does come and test it. So that's why I have this as the support. Any questions? Yeah, go ahead. I have a question, Justin. Go ahead next.
Yeah, so when you're trading, say you're trading like a call option, like I'm kind of new to options, but like when you set the strike price and the expiration, so like does it mean that, say I set the strike price like $20 more than where it's at now? So does that mean that like if it gets to that strike price before the expiration date that I set, that I like automatically take profit? Or does it have to be at that strike price or above after the expiration date? Does that make sense?
I think it kind of makes sense to what you're saying. So that strike, so are you saying like if it hits that price, it's going to automatically take you out the trade?
Yeah.
Yeah. So no, you will always have to manually take yourself out of option plays. That strike price, as long as the price is going, making higher highs, like it continues to go up, your contract is going to become more valuable depending on the strike price that you chose. So if you chose a strike price that's $20 out of the money, or it's $20 above the current price, and let's say the stock price goes up $5, you should see some type of increase in you should see some type of profit being made on the contract that you have. Now, depending on how far you set out that expiration date, will depend on how much money you could potentially make. The closer you have that strike price, or the closer you have the expiration date to being expired, let's say you set it out for a week, and let's say on day 2 it goes up $5. The time decay on that contract, it may cause your contract to be less valuable because it just went up $5. I know that's a little bit.
Yeah. So what's the deal with the expiration date? Like what happens at the expiration date exactly?
Yeah. So
I don't sell it before the expiration date gets there.
Yeah. So depending on like how much, so let's just say you're up on profits, right? And at that expiration date, you're up like 10%. So basically it'll just take you out that you'll make a 10% profit. It'll just automatically sell you out of that contract. Now, if you're losing money, and let's say it went all the way down, you lost 99%, it'll just not sell it at all. So you'll just lose the entire contract that you have. So whatever the difference is, or if you're down 50%, it'll just sell it for 50%. So you'll lose half of your profit or half of the investment that you made at that expiration date. Or you can also, some contracts you can also roll over, and that's just basically buying a new contract for a longer expiration date.
And if it's not like going the way I hope it's gonna go, I can just sell it like prematurely, right? Before it hits the expiration, right?
Correct. Yep.
Right. Okay.
And if it's going like you expected it to go, and it has done, and it does that before the expiration date, you can sell it prematurely still and make a profit as well.
So if I'd sell it prematurely, is it like, what money do I get back from?
Yeah.
Is it like vary according to how it's gone since I purchased it?
Correct. Yep. It's going to vary. Every contract is going to be different depending on how it's going. And you can see that with the contracts. It'll tell you, like, if you're losing, if you're making money, it'll show you how much profit you made. If you're losing, it'll show you how much It basically is going to show you how much the contract is worth. And when you sell it, that's how you're going to sell it. You're going to sell it for the however much that contract is worth at that time.
I see. Thank you so much. It's just my first time, so I'm excited. Yay!
Yeah.
I'm excited about options.
Yeah, options
Thank you
are
so much.
great. Yeah, absolutely welcome. Options are a great way to make some side money for sure. Sure. Good questions. All right. So that was, which one did we do? We did Marvel. Let's see if we have any more. Okay. Let's see. Okay. Workday will join S&P December 23rd. Okay, so Workday. This is probably going to be revving up now since they're going to join the S&P. Let's see. Yep. Okay. So let's draw some support and resistance to start off. Let's go ahead and find a nice little resistance. So it looks like currently it's testing the resistance level. This would be a nice little resistance at about 280. 281 is right now what it's on. We can see back here. We go to the back. Stock price was going up, tested this level, rejected it, pulled back. It came up, tested this level again, rejected it until it ultimately broke above it for a few weeks. And then it started to pull back. Even when it came back below it and it started to go back up, we can see that it tested this area. So that's a nice level of support to have because, or resistance to have for this stock. Now, if it breaks above our current support at about 281, the next place is going to come and try to test. You can say this is going to be a nice little. I'm torn on calling it right here at about 290. I'll just call it 300. We'll make it an even 300. I drew it at 296, 299, but 300 is going to be the next place for support or resistance. Excuse me, if it was to break above our current resistance. So we can see the stock break above 280. We can see it get to about 282. We should be seeing this try to get back to 300. Now, if it was to reject this resistance, where is it going to go? The first place it's going to come and try to test. It's going to be here at about 273, 270. It's going to be the next place. It's going to come and test if it was to come down. After that, if it was to break beneath this 270 range, we can feel really comfortable saying that it's going to come back down to about 260. So $10 increments. If it was to reject this 280 range, we're going to probably see it get to 270. If it rejects 270 or if it pulls back and breaks beneath 270, we're going to probably be seeing it get to 260. And then from that, at that point, our 20-week moving average will probably be closer to 260. So that's going to make this a strong level of resistance. And I will be expecting some type of rejection from that level. And by that time, that stochastic should be pretty low. My RSI should have also pulled back a little bit more as well. So that could be what's happening on this weekly. Let's check out the daily to see what's happening. So the daily is showing it has a little bit more room on that stochastic to trend up. Again, if it was to pull up from this current price at 273, I can see it coming and trying to test that 280 range. From that 280, if it was to reject this level, then we'll probably be seeing it come back and try to test this 270. Looking at the indicators, because I have room to the downside, and it looks like my stochastic is rejecting my 80 range. So with that pullback, I'm thinking that we'll probably have also a crossover to the downside on that MACD, which would cause this stock to pull back to that 260. So just definitely have this one on your watch list if you're looking for it. And I would just be waiting for it to break beneath two. If it can break beneath this 270, then I know it's going to be going to 260. So you can try to play a put option. Again, I wouldn't necessarily make my strike price 260. I would probably make it like 265, 266, just so that I know it can potentially hit that. And I would just be waiting. Ultimately, I would still be waiting to sell it at about 260, but just watching it, just to solidify that profit that I can get. Now, if it was to reject this 270, again, it's going to probably be going to about 280. And if you wanted to play call option, and if, after it rejects this, I'm looking at about a strike price of 275. Again, just giving myself that wiggle room I need, because I know it. While I know it can make it to 280, if I know it can make it to 280, it's going to make it to 275. So I'm just solidifying my profits at that point. Any questions on workday? All right, perfect. So if I have no questions, I'll pass it back off to Ladarius, and he'll go over his picks for the week. Thank y'all.
Cool. I appreciate that, Mark. All right, let me give me 1 second. Share my screen here. Which screen? You know, just share the entire screen. Boom. Okay, cool. All right. So I have a few picks. And I said a few. I have like 1, 2, 3, 4, 5 in total, along with the spy that I'm looking at. I'm going to add to my watch list. All right. So first thing is the spy. Where is it going? Because a lot of people like to day trade the spy. A lot of people like to swing trade the spy. So where is the spy going? So for this one, since we already looked at it on the week, let me look at it on the day really quick. All right. The spy right now looks like it wants to test this line right here at 600. So 600.64. What I'm going to do is set an alert for the Discord. We need it crossing down the horizontal line. We'll have spy moving down, and we'll just put check the spy. Check the spy to the downside, right? No, on the key, yeah, spy. Sorry, I'm typing on the new keyboard. Downside, boom. All right, check the spies at the downside is the alert that we're going to have. So once it hits 600, it's going to shoot this alert to the Discord. So we'll be notified. Sorry, there's police in my outside my apartment building. But yeah, so once it hits this line, then we'll be notified to check in with the spy. This way we don't have to watch it every day in the Discord. And then if we look at it, you can look at the VRVP right here. Again, the VRVP tells us that where's it at? Right here, it tells us that if you hover over this area, so around where it was just at 605 to 610 last week, right? So if people are thinking that it's going to go there this week, if you look, you can see that we have a lot of sales in this area. So we got 89 million sales versus 44 million buys, which means that if you do see it pop up to 605, don't be alarmed. If it goes up to 605, 606, 607, don't be alarmed. There's a lot of people waiting to get out and sell here. And then at this level, once we get down into the 600s, you can see that we have more buys coming in. You got up at 66, down at 34. And then when you go down here, it starts to get a little bit tighter. You got 105 and 82. So again, I want to check it at 600 to see what my other indicators are looking like. And that's what I'm waiting for on the spot. The RSI is at, we can call it pretty much 60. So still up there, and it's pointing down on the tail end. So we could see some downward movement. And then when we look at the moving average convergence divergence, the MACD, we're already crossed over to the downside. And we can tell by checking the histogram, it is dark red. These bars are getting longer. So we could be seeing some downward movement. Now we go out to the week. We can see that, again, everything is still high. We'll leave that line there. You can even see with that line, we had this red candle reject for us, right? We had a strong move from 571 all the way up to 600, and then we immediately rejected from 600 all the way back down to 584, and then we moved back higher. So I'm looking again for some action at 600 to see what we can do. And if we have a sell-off, so if everyone decides to go ahead and take profit, moving into the next 2 weeks to go ahead and do some tax harvesting, then we could see it drop down anywhere between 580 to 570, 5. This is what, at 572. So this should continue to move up, but 585 is what 585 is where I'm paying attention to it at. We look at the MACD. The MACD is up. Stochastics is up, but we do have some weakening there. So let's see what we can pay attention to going into the new year. All right. What do we say about the RSI? Look at that. That RSI is hot. It's true. Does that mean buy? No, way too high. I would never, I don't care. The CEO can come and tell me that his company is doing great, buy it today. And if the RSI is at 76, especially on a month, I'm not buying it. I need a more favorable RSI. This is the first thing that I checked. So RSI 76, we can see the last time that the RSI got pretty high, what happened? Extremely fast drop off. It built its way back up, and then it just took a nosedive all the way back down to 63, and then it trended all the way back down to 44. So this is a dangerous space to watch the SPY at. So first quarter of 2025, I'm looking to see if we're going to get a correction. Again, if we don't get one going into the end of the year, I'm thinking still within January, maybe into early February, that we could be getting a pullback, which is going to be good because the market needs to reset, and that'll give us an opportunity to, again, plant those seeds and watch them blossom throughout the year. So the SPY right now needs to cool off. Again, this is the month. If we look at the, where am I at? If we look at the stochastics, we can see that, I mean, it's at what, 97? It's also making a triple top for my pattern people. A triple top is a bearish pattern, which means that it needs to come back down. And you can see every time it hits 100, it comes down. It hit 100, kind of floated there, came down, hit 100, started to break down, and we can see another pullback. So if you wanted the SPY, again, the SPY is one of my favorite stocks. It is a basket of the top 500 stocks. They actually rotate the stocks in and out depending on profitability and other metrics. So it's definitely good to have, but we always want a good company at a bad time. This is a good company we want a good company, bad time. This is a good company at a good time. So we don't want that, right? It's doing too good right now for us to make some money. Now, we would have got back in 500, 550. I mean, yeah, better. That's a better runway for us to make profit. So right now, the SPY is hot. If you want to do, smaller day trades, things like that, of course, that's always fine. But if you're looking to invest and set up for first quarter of 2025, again, be very careful. Jessica.
What was that stock that went up by like $160 in one day the other day, like a few days ago?
I think that was Broadcom, AVGO. I think it was AVGO. That one. Yeah, they had an earnings beat. So earnings always adds volatility. I've seen stocks jump up $200 a day in one day based on earnings. I've also seen a stock almost get chopped in half and go down by like 30-40% in one day because of earnings. So yeah, that one popped, a really nice pop for one of the top 10 stocks in the SPY, and yeah, that was a nice pop for sure. Cool. All right. So that's the SPY. Do I have any questions about the SPY? Perfect. I take silence as a thumbs up. All right, so let's look at some long-term prospects. First Solar. So First Solar is a solar company. I really like the company. I've been trading it for a while. Again, if you see these blue lines all on my chart, that means that I've been trading a stock. Right now, I have this extended line right here. I have this extended line placed here because this is the trend line that I wanted to break moving to the upside. So right now, First Solar is 199. They have price targets for 350 to 400, which means that the stock could double. Also, the stock has been up towards 300 before it decided to make its move down. So again, good company, bad time equals a potential trade in my book. So we can see that this bottom line right here at about 180, it is bouncing off of it. It came down. It's kind of making falling wedge. So it went down, came up, went down. So if we're looking for another move back to the upside, this could be a good time to, again, it's just coming off this floor at about 180. Right now it's at about 200. So $20 off the floor. And this could be going up to hit our extended line anywhere between 230. I mean, if it waits, it could be 225. So 225 to 230 is where we could see another test at this line. Now, if we go up and test this line, I think that we're going to get a pullback back down to about 210 because it looks like it is forming a head and shoulders. And a head and shoulders is one of the most successful patterns to trade. I think it's like around like 85 percentile as far as completion rate. But we already have the head here. We got a shoulders there. And to get another shoulder, we need to go up to this trend line and then come back. So we make a strong move, we're good, and then we pull back. That's another entry, and we can take this one higher. So again, we're looking at longer term prospects. And again, First Solar is a great company. If you want to do your research on them, you can. But I'm going to set an alert for the Discord on this line as well. So wait, that's my extended line. I want it to cross up. And we're going to do SSLR. I want it moving up. Oh. Sheesh. Moving up. Cool. And we're just going to check the chart. All right, cool. So I created that alert. So now, whenever FSLR hit this line, we'll get a notification in the Discord. We can check our other indicators and see what is going on. But again, this falling wedge pattern is one of the patterns that I like to play, especially for my option people. So if you're looking for leaps, this could be good because anytime a stock is low like this, the price of the option contract is going to be cheaper. And as the stock starts to climb, more people want the contracts, more people want the stock, the price of the contracts increase. So I'm looking at leaps on this. I just need for us, in my opinion, I need to be back above my 20 MA for this trade. So the 20 MA right now, you can look over here in the yellow, it is at 212. Right now we're at 200. I need to be top side of that 20-week moving average. Once we get above that, then I'm ready to see, can we test that line to the upside? So First Solar is the one that I am watching. Let me back out some. If we look at the other indicators, it looks really sweet, right? We look at it, you can see 47 on the RSI and it's pointing in the upward direction. Again, I like 45 to 55, so I can take it up to about 70 and make some money. So we can check that one off. If we check the MACD has been to the downside for a second. We almost had a crossover right here, but then it gave way. And if you check that histogram, you can see that we have that faded red already starting to happen. And you can see this blue line is curving up because the buying pressure is starting to build up. So once that buying pressure builds up, we get a MACD crossover to the upside, then we should see some green on our histogram, and we should start to see more upwards momentum. So that looks good as well. And then that stochastics, like I said, if you want to be risky, you could buy at 0. You're running a risk of it staying down there longer. But then once it crosses that 20, that's when it piques my interest because I want to take it from 20 to this dotted line at 50. And then after 50, I want 80 and then potentially 100. So looking at it from this point on the week, really nice chart. Again, making a nice pattern that I've traded before. 47 RSI, MACD is nice, stochastic is nice. The only thing about this one is that it may take some time. So I'm going to continue to watch this one. Again, I need it to break that 20 MA. It's been rejecting off that 20 MA. If I zoom in, you can see we have some red touches. That means that the price actually went there and then it touched it and then pulled back. Then we just had a touch, first week of December, it went there and then it pulled back. So again, I need confirmation that we're not going to pull back down. If we do pull back down to this trend line here at 180, then that may be another potential for a bounce. But again, right now we do have that upwards momentum that's building on all our indicators, and a break above the 20 MA is what I'm watching. Do I have any questions? No questions. Let me check the chat. FSLR, what strike expiration would you suggest? So with FSLR, it depends on how far out you want to go. In this situation, again, I think that in the short term, let's say we do get the pop that we're looking at, I don't think it's going to break this trend line immediately. So I think anytime we come into contact with this trend line at a first touch, after we already rejected it twice, would be a place for me to take profit. Now, your strike, it just depends on how much money you want to spend, and you also have to look at your expiration. So if you want to set this out, if this is a trade that you want to set out until the summer, or you want to set it out until, and I'm talking about options, set it out to the summer, or you want to set it out for a year from today, then I honestly would not go anything higher than like 230 to 260. I know it's going to be cheaper if you go up to, again, this could go 300, 400 bucks, but I think that having a sound strike would make more sense because then you have a higher chance of profit. So I would go 230, 260 if I'm looking at swinging this into next year. All right, cool. That is for solar. Let's continue on. Let me see. All right, Affirm. This is one that I really like. Again, you see a lot of blue lines on the chart. This is kind of obsessive. Let me clear some of this up. That means I've been looking at this one a lot. This has made a crazy move. It is at $70. It used to be, look down here, it used to be 10 bucks. So if you would have added, if you would have put $1,000 a year ago in this stock, you would have $7,000 today because it is at $70. A year ago, it was pretty much 10 bucks. So Affirm, it used to be, the first time I was trading Affirm, it was up in the 170s, and I got in at this cup and handle. This was one of the first cup and handles I ever played when I first started getting into charts. This was back in 2021. Not back into charts. When I first started to get heavy into patterns, I was already in charts, but this was a cup and handle I tried out, and you can see it gapped up all the way to like 123 from being down here in the 60. So really nice price movement on Affirm. And I think that we're going to get back up to these levels. I think that with the fact that we're getting a new president on the 20th of January, we could see policies change and become more favorable to banks and loans and things of that nature. So I'm thinking that Affirm, people are already buying the stock. Again, it's up 7x, right? It's up 700%. It was 10 bucks. Now it's 70. I'm thinking that it could go higher. What I want to see is a break at this top line at 80. Again, all of these lines that are lower that has been breaking through are lines that I've been setting for to watch to see if it's going to break through that resistance line, and it has. It's doing pretty good. Now I think that it's time for it to cool off. You can see that RSI is high, extremely high. You look at that stochastics, it's just coming off 100 at 97. The reason why I have this one on my watch list is because I'm watching it for news. I want to see, I actually want this to pull back. I like the stock so much, I want it to be lower. And again, I've been trading it for a while. I think I started taking profit back in the 160s, 170s before it pulled back. And then I was just waiting for other opportunities to get in. But again, I think Affirm could easily go to about, I think I said, 125 in the past. That is, this is 100, so 125. Yep, 125 would be top side of this right here. So not going to place a line because it's going to be too many lines on this chart, but keep your eye on Affirm, and then also look at the earnings. They've been smashing their earnings consecutively for what, 1, 2, 3, 4, 1, 2, 3. So about a year and some change, almost a year and a half, almost 2 years of consecutive beats. So keep an eye on Affirm. Affirm is doing great, and I think Affirm is going to do great going into 2025. Again, this is a better picture on the month. You can see that it has been marching. So this month it went from 43 to 70 in 1 month. That was what, November? Perfect month for it, and now it's taking a break. Once it pulls back, I'm thinking 60 to 63 is where I would like to enter, and then I can take it back up to 80 and potentially get into the 100. So Affirm is one that I would watch for sure for 2025. Any questions? Cool. Let's look at it on the lower time frames. All right. Looking at it on the day, this is interesting because a firm could move up a little bit more. Again, I wanted to move back, but the charts are the charts. So you look at, and again, this is for short term. So what I just talked about is longer term prospects, you know, landing you in the summer to December of next year. Right now, it is getting pinned up against this point right here, this line that it could not break. Like it's been sitting here for a while, just chopping. This 20 MA is squeezing it up against this. So eventually it's going to make a move, a sharp move to either side. It's either going to pop down to about 63, which fingers crossed that happened for me. So I can go ahead and get in. I'm being a little greedy there. But if it gets pushed up to this enough, it's going to break through. And then we could see this RSI go back above 70. RSI is at 61. It could go back up to 70 before coming back down and going even lower. Again, when you have these moving averages stacked, these the greatest, right? You got them stacked 20, 50, 100, 200, same thing 20, 50, 100, 200. They're stacked. And I said it is going to bounce. It is coming into contact with that 20. So we could get a small bounce that over revs everything, and then we should be coming back down. But again, I still think that the stock is going to be great for the long term. Also, we look at the MACD. The MACD is crossed over to the sell side because of the chopping. It's been chopping back and forth, but it looks like we're already getting some weakening here to where this could curve back around and go to the upside. But again, it's at a pressure point, and it's going to make a big move either to the upside or downside on the smaller on the shorter term. Also, that's the stochastics right at about 20. It just came off of what, 0? That's not 0. That's what, 7? Went back up to 20. So I actually wanted to get in between that 20 to 25 range. If it does, then I could be looking at a small trade to where I maybe trade it for like a week and a half potentially. But again, I still have to watch out for the macro of the market to see if the SPY is going to pull back, if people are going to sell off. So that's why I'm being a little cautious with this one. And I said, again, this pressure, it looks like it wants to go up. But again, I know how things work. This could be it pushing up against a point that it just can't beat. And then it may give up to the downside and then try it back again. So keep an eye on the firm. Again, great stock overall. And moving forward, again, I'm still seeing 125 as a nice place for it to land at some point next year. Any questions about a firm? Let me check the chat. Cool. No questions. Let's keep it moving. All right. Do I want to do this one now? I'll do this one last. Yeah, I'll do this one last. Pretty well, I can do it now. All right. This is SoFi. SoFi, pretty much same sector. Where's my, okay, there we go. All right, pretty much same sector as a firm, and you can see the similarities in the chart. Well, you don't have a whole bunch of blue because I haven't been watching this one that much, but you can see RSI. So the whole sector is reacting pretty much. You can see it's pent up against that 20. Pent up against that 20. You can even look at the MACD, same thing. MACD, stochastics. This one's a little bit higher at 22. So SoFi could be another one, but it has a higher trend line that it just can't break, and it's right there. So if it breaks this line, we want to know because it could push up. And it could go up to about $18 to $20. I'm going to go ahead and set an alert for us in the Discord. We want to know if it's crossing up. Got SoFi moving up. And we just need to check SoFi for now. I'm not calling any plays on this one. All right. So that is set for the Discord. We're going to watch that. Again, same thing as the firm. Now let's look at longer term prospects. This one is slightly different, same sector, but if you look at the week, it's had an excellent year, right? RSI at one point was 86, which is, again, I would never touch that. But what you'll notice when you look at the moving averages, this 20 is just coming back up above that that 200 MA. So the moving averages are trying to conquer that 200 MA. The 20 is already above it, which is a good sign. And you can see that this stock was higher in the past. This stock was up to what, $28, $29 in the past. It looks like 23, 24 is where it can hit in the future. It's already sitting around this line. It needs to break, and there you go. It needs to break and move higher. And so, I mean, there's a few points in between. Again, that 18 and 19 point. You also have this 20 point, and then you have this 23 as a high point, which if this is going to go back to being at all-time highs, then we need to watch this break at above 24. If you look at the other indicators, extremely high on the week again, but if we're talking about summer to Christmas of next year, let's pull it out some and look at it on the nope, not the month, the 2 week. I skipped over it. Look at it on the 2 week. So on the 2 week, again, you get a better picture. Yeah, you get a better picture of what I'm saying. The stock has, again, this stock was what, even cheaper. I mean, if you go back to 22, this stock was $4. It is now $16. So crazy move up. And now investors are actually had time to see what the stock could do. If you look at the earnings, really nice spread for earnings beat. It only missed one time back here. This is what, in October of 23. But ever since then, they've gotten their act right and it's been moving up. So this is one I'm going to be watching. I just set the alert. But again, same type of price action as a firm, same sector. And I think that that sector is going to do well going into 2025. Any questions? Do you play breakouts? A firm had a nice breakout in November. Yep, I do play breakouts. And actually, I called the breakout back here. I called the breakout here. I said that we need to, so it was ranging for a second between 43 and 49. You can see we had some rejections here, and then eventually it broke out, and then it got started to go up into the higher 60s and flatlined pretty much at 70. But yeah, we were watching it for a while here in the 40s because we had some points back here at 49 back in December of 23 to where it was rejecting a lot, came down, went back up. And then if we back out even more, we even talked about this pattern here. Let me move to the weekly. So this is where pattern recognition helps a lot. It went up from what, $10 to 50. It came down on a slant and then it built its way back up. So this is in a long, I mean, you can call it, they call it an N-shaped pattern, or you can call it a bull flag with just an extremely long consolidation period. But then it popped up. So it went up for the same level that it went down. So it went up here, came down, went up. And that's why we have this top trend line to 80, because it went from 10 to 40, back down to 20, and up to 70. So rules of the flag is that this should be going back up to 80. So right now it's at 70, is already making its way up. And before that, it was flagging. So if I zoom in even more pattern stuff, it made a bull flag. A bull flag is simply a stock that moves up extremely fast with a lot of green candles, and then it starts to flutter like this, just like a flag would. So this is the flag pole. This is it flagging out, and then it popped out of that flag to the upside. So we knew that this bull flag was being made. I'm going to show you another bull flag example that we can take advantage of. But yeah, definitely been watching a firm for a while. Does that answer your question, Ross? See, you wrote in the chat. Cool. I don't know if he's there. All right. But that's a firm. All right. I said I had a bull flag for you. This is Coinbase. So crypto has been making some doubters believers. And I think that Coinbase, as far as stocks go, can Coinbase and MicroStrategy is probably going to lead the way when it comes to nicer returns. I mean, you do have some of those miners. You got Mara, Riot Blockchain, so on and so forth. Excuse me. But I think that Coinbase is one of my favorites. So we're talking about 2025, summer, December of 2025, Coinbase. I've always said it. If you've been in these sessions for a while, you already know what I'm going to say. Coinbase is $1,000 stock. I said that when Coinbase was at 150, and we talked about this breakout that it was making because it was making a falling wedge. Now, we just talked about a bull flag. Let me switch these candles so you can see a little bit better. And I'm going to strip everything else away so you can see what I'm saying. This is another bull flag. So again, we look at a firm. You see how a firm popped up, consolidated, and then popped out of that flag to the upside. Look at Coinbase. Popped up, consolidation. It's testing that top trend line. It breaks, it is going flying, right? So the fact that we're going to get Trump back in office on the 20th, and they're already talking about crypto, right? Also, the SEC, I want to say the head of the SEC that was giving Coinbase some problems has already decided to say that he was going to retire or step down. I can't remember, but he's not going to be in the picture anymore. So we should get someone that's more favorable to crypto because they want the U.S. to be the leader in crypto. And guess what? Crypto gets more leeway. Coinbase goes up, right? And it continues my thesis of Coinbase being $1,000 stock. So again, nice bull flag here. It is channeling, and just like this was channeling, it broke out. This is what you're watching. So the thing is that you have to watch it between 280 and 340. So like Bitcoin right now, if you look at, let me use the SPY chart. Bitcoin has been moving up. I think Bitcoin is at 103, 104. Oh, it's at 106. Oh yeah, this. When I looked at it earlier, we had a one-on earlier, and Bitcoin was at like 103. Bitcoin is at 106 now. And if we look at Bitcoin on the day, this MACD crossover, the switch from selling pressure to buying pressure is already happening, right? So that's the little pop that you get when it switches over. That's the stochastics is at 81. And then the RSI is high. I mean, it's at what, 70? Again, we could see some over revving. This is Bitcoin. A lot of people are excited about it. A lot of people are getting in. And our Bitcoin content creator, Sean, he called the top around 108 to 110. So his prophecy is coming true. Bitcoin is moving up. And he's saying that 108 to 110 is just a local top. Not saying that that's the highest it's ever going to be, but that's where it's going for right now, right? So you want to reference trade the two because Bitcoin is going to drive Coinbase. The higher it goes, the higher Coinbase is going to go. So the fact that over the weekend, Bitcoin has been moving up, Coinbase should open higher, closed at 310. We actually were trading this in the Discord last week. Probably, I think I'm going to trade it again this week. I need to see what happens at 340 because if we reject again at 340, that gives me an opportunity to get in a little bit better. But if we break that 340 line, what lies above? Oh, I'm on the day. That's why. Let me move. If it breaks 340, 375 is our next target. And if I scrunch this up, you can see why I made 375 the next target is because 375 is where we rejected harshly back in November, December of 2021. We got up to around 370, 375 and just went on a crazy swing all the way down to $33. And now we're making our way back up. So the fact that we're making our way back up is telling us that, hey, Bitcoin keeps moving up. This could just pop this up just enough to reclaim that 375. And then I'm thinking that if we hit 375 before the end of the year, we're going to get some consolidation because it needs to cool off. It has been moving since this falling wedge all the way down to this trend line that we call back here at about 145, 150. And again, this is a giant pattern. This is an inverted head and shoulders. Like I said, one of the most successful patterns. Shoulder one, this is where the head formed. Shoulder two, and we're going back out. So the way you play this one is a breakout above this line right here. Breakout above 375. So again, if you want to be conservative, 375 is where you could start to pay attention to it and play it if you feel like it's already running. If you want to be a little risky, you can start to get it in this range, right? 280 to 340. And if for my long-term people, that's like, okay, cool. It's going to 1,000 at some point, so I could triple my money. buying it between 280 and honestly 375 for the long term. Again, we're talking 2-3 years down the line, would not be bad. You buy Coinbase at let's say 300 to 400, but then in the future it gets to 1200. You're not going to be worried about the difference between 310, 340, 375. You'll just be glad that you got it in. So again, my whole idea about this is that crypto is going to be moving. This is kind of a safer play. If you're worried about crypto and you don't know enough, you haven't done your research, this is a safer play because it's in the stock market. They have regulations and things that they have to do for Coinbase. Since it's on the stock market, they have earnings, yada, 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 right? But yeah, that's what I got for Coinbase. Do I have any questions on Coinbase? Let me check the chat. Cool. Last one, Shopify. So I've been watching this one again. Excuse all of these blue lines. That just means that I've been watching this one. But in the Discord, we talked about Shopify. So I called Shopify before it even popped. Shopify popped from earnings, but I said these are the stocks to pay attention to. This was back when Affirm was in the 40s. I said watch Affirm, watch Shopify, and watch PayPal. Those are the three to watch. I think I said that like a month or two ago, but those are I still believe that. I still think that Shopify, Affirm, PayPal, those that are in that sector. I mean, you could throw SoFi in there as well. Those are going to be the stocks to watch going into 2025 because they are reclaiming their 52-week highs, going into their all-time highs. You can see this is around the all-time high for Shopify, around 150 to 176, 177, and it looks like it's on a fast path there. So again, if you're looking for something, I'm not saying tomorrow, I'm not saying this week, I'm not saying January 1st. I am saying summer to the winter of 2025 to where you can plant some seeds, you can kick out a long strike, you can kick out a long date on an option, or you just can slowly accumulate shares as this go up, and down. Shopify is a good candidate for that. Now, where would I look at grabbing some more? At 114, it's pretty high. You can see that we checked the RSIs at 67, that MACD is crossed over, and then that stochastics is at 95. So sitting pretty high. What I would like is a retest back to like 105 to 110. And then once it comes back down to that line, matter of fact, I set an alert. I just want it crossing. I don't care which way it goes. I just want to check shop. And shop, I'll just say shop is moving. Look out. All right, cool. So once it pulls back, it hits that line for me, it'll shoot it to the Discord. We'll know that it's ready to be enacted on, and then we can figure out which way it's going based on indicators. If it hit this line and we're still need to connect gotta connect my computer back to my other Apple devices. But if it hits this line, we need to know if it's going to go lower or if it's going to bounce and move higher. So that's why I set that alert. But again, all three of those, add to your watch list, watch going into 2025, and just be prepared for what's about to happen. So if you think that the same stocks, you think that semiconductors are going to lead the way again, as far as percentage, I'm not saying as far as like how much money they make or market cap growth. I'm saying, do you think NVIDIA is going to double again this year? Probably not. NVIDIA has a $3 trillion valuation. If you think that NVIDIA is going to double again, that gives it a $6 trillion valuation, right? Probably not going to happen. So people are going to be looking to find profits in other areas. And since the mega caps and the larger stocks have been running, they're going to go to small caps, medium caps, and large caps, right? And that's what Shopify, Affirm, and PayPal, or again, SoFi as well. Cool. Any questions? Let me see. Any bear case for coin? Yeah. So thinking about coin. Oh, I already got it up. What am I doing? Thinking about coin to the downside. Again, a bear case for coin right now is 280. That's if it pulls back. That's what I'm thinking. 280 down to 240 is what I'm looking at as a bear case. So anywhere between 280, 260, 240 is what I'm looking at as a bear case for coin. But right now with Bitcoin at 106, I don't think that that's happening quite yet. We're going to get a pullback at some point. Just be prepared. But are we going to get a pullback this week all the way down to 280? I mean, I hope, but so I can get in better, but not sure. Good question. The next question is, many of the high time flyers from COVID highs are coming back. DocuSign was a beast, and it sold off so much. Is it coming back? Yeah. Yep. Again, DocuSign was like $300 and it started around 50. Like this is what the 2019 going into 2020, and then it just skyrocketed. I actually owned some DocuSign around this time. We were trading it, trading options, buying shares, you name it. And then you can see right after COVID-19 had already settled, we went into a bear market, the bear market of 2021 and 2022, where a lot of investors and traders decided to stop trading and investing because the market wasn't doing what they wanted it to do, and it sold all the way off, right? So now it's finding its level. It's just channeling here. It found its ground at about $40, and it's starting to climb back up. So it was at 40, December of last year. Actually, in January of this year, it was $40, and now it is at 94. So Ross, good point. It is moving up, and it looks like we could get some action between 120 to 140 before we have a major pullback and some major chop. Now a high point could be 200. You can see here, this again, the stocks remember price. We can see that 200 could be where we end up really slowing the growth. Anywhere between 180 to 200 is where this could slow down at. So yeah, you're right. The COVID, the other C word, the COVID darlings are coming back from being on the ground. So keep a lookout on stocks that are low. Again, we want good companies at a bad time. So this was a bad time for DocuSign, and it is now coming back. All right. We're at 750. So right at time, I've talked enough. The chlorophyll water has been helping a little bit, but yeah, good stocks that we've been watching. Again, those alerts are set, so you don't have to worry about, if you're in the Discord, you don't have to worry about watching it yourself. As soon as it happens, it'll shoot to the watch list channel, and then it'll have that note on it as well. You can just go check the chart, or you can ping me if you want to look at it together and I have time. So do I have any questions? Cool. Mark, we got 10 minutes left. Do you want to do a pattern? You think we got time? It depends on the pattern too.
Yeah, no, we won't have enough time for the pattern I was going to do.
All right, cool. All right, so we got 2 stocks in the chat. Can I look at WBA and Dave? So I'll look at these 2, and then I will shut it down, or not shut it down, but I'll close us out. And then if anyone's interested in looking at the Discord, what it looks like, we can look at it at that time. If not, we will see you in the next one. So let's look at WBA. Sheesh. This one has been taking a beating. Ouch. It's trying to find its ground. It's at the bottom. I need to move the VRVP. I can't even see. Okay. All right.
What kind of company is this exactly?
Walgreens.
Yeah, but it says Walgreens Boots Alliance. What's that?
I think that's the actual name. Like it's like,
okay, I see.
Yeah, it's like if you look at Google, the actual parent company for Google's Alphabet. But yeah, so they've been on the downtrend. I haven't looked at the financials to see why they're down this low. It looked like they just had a decent earnings. The earnings before that. But yeah, this one is finding its ground around $8. It's now up to $10. What I would look for on this one is I need that 20 MA to be back above this 100. It's not going to get back above that 200 anytime soon, but this could go back up to this level right here. Could go back up to this level at 1835. And then after 1835, it looks like we have this level right here. So it could range between $18 and $22 because we have a lot of touches at 18. It even, after it was breaking down, it even came back for one more touch and then it just tanked off. So 18 to 22 is what we could see for, again, best case scenario upside for right now. We could also see 14, but if it goes up to this 14 level, it needs to take out that 200. And one thing to always remember with the 200 MA is that I don't care which side you're coming from when you test it, that first tap on that 200 is going to be a rejection. So we're going up to 200. It's at what, 1255. If we continue higher and we hit that 200, we're going to pull back. How much of a pullback, I can't say, but for all the years that I've been trading, that first touch on the 200 is always a bounce or a pullback. So if you're up above the 200 and you're coming down into it, it's going to bounce off of it like a ball bouncing off the ground. Or if you're going up into the 200, you should be getting a pullback. So watch out for that 200. But yeah, this could go. So with that being said, I think that the ceiling, the local ceiling right now is 1255 because that's the 200 right now. 1255 to about 14 is where you can see it. So $2 to $4 extra per share could be nice, especially for a $10 stock. You load up on enough shares, or you kick out some option contracts. All right, cool. Dave, this is what, Dave and Buster's. I think that they had a crazy year. Is this Dave and Buster's? No, that's Play. I'm getting them all mixed up. All right. Oh yeah, no, I was right about this stock. Crazy run, but this is actually a comeback. This is not. So we zoom out like this. This is why I always tell people when you're looking at charts, back out and see the whole chart. Don't just stay locked in to one small part. So it is at $90. It's had a crazy year. At the beginning of the year in January, it was what, $28. Now it is 91. Crazy move up. Nice move, nice percentage gain. And it looks like right now 120 to 125 is where I will be watching it for a continuation to the upside. If we look at the other indicators, it's pressing again, just like Affirm and SoFi. This 20 MA is resting on that 20 MA. It has a little bit more room to move up from 65. We can see that it can over rev. MACD is crossed over to the downside, weakening, and then this stochastic is climbing at about 9. So I'm not sure, but this may be in the same sector. Yep, finance and major banks. This is probably in the same sector as Affirm, SoFi, PayPal, so on and so forth. So all of their charts are looking the same. But this is good because the more stocks you see with the same setup in the same sector could tell you what the sector is about to do going into the new year. So again, pay attention to the finance sector. Pay attention to these stocks. You can throw Dave on that list now that we're looking at this chart. Just keep an eye out. I'm not saying to go ahead and just grab it up immediately, but these are things to watch. So when you do see a pullback, when the whole market is bleeding and they're talking about market crashes, you know, okay, cool. The market is down. Where do I need to plant my seeds to move, to move the ball forward in the next year? Cool. With that, we're at 7:55, so we're right at time. I'll go ahead and stop here. Let me stop sharing my screen. And let me stop the recording. Where are we at? Boom.